Number two is volatility, and this is important, so I'm going to give you a brief definition if you're not familiar with it already. What does volatility mean? All volatility tells us is how volatile a stock's price can be. So, high volatility implies a stock's price is volatile and can move up or down dramatically. The most important takeaway from this is more volatility means the option is more expensive. Less volatility means the option is less expensive. And we prefer to make trades where the volatility rank is greater than 50. Now, that might not make sense to a lot of you, and this is not something you can work out on your own. Software has to show you this. You cannot work out volatility rank on your own. Now, I'm sure there are multiple platforms that give away volatility rank. I don't know them offhand. The only two I know that do this right now, hopefully this changes over time, is one called Tastyworks, and the other one is the Thinkorswim platform from TD Ameritrade. And I am in no way promoting either one of these people as the person you should trade with. All I'm saying is, as far as I know, these are the only two platforms that show volatility rank. So if you can find more out there and you prefer to trade other places, absolutely do your thing. But if you want to go straight to something where you know it's at, one of these two platforms will show you volatility rank. And the way it looks, just so you see it, on Tastyworks, what they do is there's multiple versions of it. One version is something they call a tile. And in the middle of every tile is a number. And right here, that's the volatility rank. It's that easy. So if we're looking to trade short puts, we're looking for a number that's 50 or above is our perfect world. Now we will do it if it's less. It's just a preference. But if we see two stocks and they're both things we want to trade and one's at a 70 and one's at a 20, we're going to take the 70. So on Tastyworks, it looks like this, among other variations they show. On the Thinkorswim platform, you have to create it yourself. And I'm going to attach this as an attachment. But you can create the volatility rank with this Think script right here. You can ask them how to put it in there, etc. But this is the breakdown. This is the verbiage. I'll attach this as a PDF so you can take it and add it yourself if you decide to use that platform. But what does volatility actually look like? Because if you've never seen it, you might not be familiar with it. So I really think it's important to see why volatility is so important to us as traders. So what we're going to do here is we're going to look at two stocks side by side. Doesn't matter the stock. This is like Yahoo. This is like an XME ETF. The important thing here to notice is that everything is about the same. The price here is just over $41. Same here. It's just over $41. The option chain we're using right here is the October 37 days. Same option chain right here. The strike prices we're looking at are both the 41-42 strike. So these stocks are essentially the same. So how does high volatility compare to low volatility? Well, you can see here, if we look at those two strikes up here, you see 278 to 281. Down here, that same strike is only $1.14 to $1.25. It's less than half as much. If we look at the 42 strike, you see 235 to 238. Down here, it's about a quarter of it, 68 cents to 75 cents. That's what high volatility looks like compared to low volatility. So, of course, if we're looking to sell something, we always want to sell something for the most money we can make, right? If we're selling our house, we want to sell for the highest price possible. Volatility tells us when the price is high. So, if we're looking to sell something, we obviously would rather sell something in this stock over this stock because look how much more we're collecting when we sell it. 2 to 4 times as much. That's what volatility rank will tell us. Which stocks are volatile, the rank is high, which means their options are higher priced. We like to sell high priced things. That's exactly what volatility is and why it's so important to us as traders.